there, I'm Dean Heskin, President and CEO of Swiss America Trading, and you are tuned into our podcast, The Secret War on Cash, where we take an in-depth look well, sometimes in depth, sometimes we just take a brief look, but into some of the changing things or dynamics in not just our domestic markets, but the global markets, global economy as well. I'd like to introduce my co-host, Chris Agelastos. Chris, good morning to you. How are you?
Good morning. I'm doing well, thank you.
Okay, very nice to see you. We want to talk about things that are going on overseas right now, specifically in China. Now, we've been talking about China a lot, partially because of their involvement in BRICS, partially because there's been a lot of back and forth with all the tariff talk and so forth. But in this Watcher.guru article here, the rise of the Chinese yuan, three signs it's gunning for reserve status. Now, we've been talking about this, how, the dollar, BRICS is trying to de-dollarize the world, basically.
hmm
And, the world is looking at what's happening with the dollar because the dollar is on the ropes, to be clear. And the talk has come up multiple times as to what is in fact going to be that next currency to, take the helm, if you will. And now in this article, it's suggesting the yuan. And as I read this, the reasons they're saying this are all very compelling, meaning like this is something that I don't even know how we would stop this from happening or how this wouldn't happen. So there's three reasons why the Chinese yuan could be the next reserve asset. I'm going to hit the high points, Chris, and
Yeah.
then I'll let you talk about it. The first they're saying is reduce sensitivity to global chaos. And many economists agree that that is the case, that I'm not going to say they've been impervious to it, but they definitely
hmm
have not been as dramatically or drastically affected as a lot of other countries have. The second is the resilience that they've shown towards Trump's tariffs, and that is absolutely true. I mean, Trump can only do what he's been doing, and that's continue to threaten them with these tariffs and whatnot. But again, they're seemingly somewhat impervious to it. And then thirdly and finally, and this is really important, the offshore yuan market continues to rise. So it's not just something that their currency is doing well because they've decided it's going to do well. They're getting a lot of the same support the dollar had for all those years. A lot of these other countries out there are starting to say, you know what, we think this is the direction to go. So tell us
Yeah.
what's happening here, Chris, and what might we expect to see?
Yeah. Well, I think that's probably one of the biggest things that they have going for them in China is the dollar's weakness. So we've sort of opened up the door to this opportunity for the yuan to grow and reach more stability and be sought after. And so that's part of it. If people weren't when I say people, I mean nations and large investment firms. If they weren't looking for an alternative to the dollar, the yuan wouldn't look as good. But we've given them a lot of reasons to look elsewhere, and so now they are in fact a strong competitor. Obviously, the falling value of the dollar has been a big one. You mentioned the reduced sensitivity to global chaos, right? And they reference in here the Russia-Ukraine war. The yuan has stayed much more stable while the dollar has fallen this 10% in just the last year. And so people are now viewing it as an alternative safe haven asset, which the dollar, pretty much for a lot of years held the reins as being a universal safe haven.
Well,
Trump's.
we covered in an earlier podcast how
Mhm.
year to date the dollar's down 10% already. And in all
Yeah.
honesty, I would venture to say that probably one of the biggest reasons it's not dropped more and or in let's call it bigger trouble, more
Uh
trouble,
huh.
is countries still have assets that are invested in United
Right.
States in our dollar. And if not for the fact that they need to get out of those assets, they don't want to, cut off their nose to spite their face type thing. So sorry to interrupt you,
That's
but I
it.
mean this is a major problem, a significant thing.
Yeah, no, and they are definitely not. I think most of the investors in the U.S. And when I say that, I mean even foreigners invested in the U.S. They're not, hoping for a drop in the dollar. I mean, I'm sure they would probably not or would prefer to not worry about any of this and not have to make changes and diversify out. But the fact of the matter is, we're forcing them to sort of reevaluate their positions, and because of that, we're seeing a lot of global trade being done in the yuan. In fact, even more than the euro right now. And in cross-border transactions, when we talk about this, offshore stability as well, the yuan has surpassed the dollar. So it's not, again, it's not like flipping a switch and this is going to happen overnight, but all paths right now are leading away from the dollar. And the yuan is the next most logical step for a lot of nations that are looking for trading partners. And, if they're wanting stability. Anytime you have somebody trying to build a business of any kind, they want some stability and consistency where they can find it, because doing business inherently is a risk anywhere in the
Sure.
world, no matter what type of industry you're in. And so people are looking for safety, stability, security anywhere they can find it. And right now, that's a little bit easier with the yuan than it has been for the dollar in the last few years. They also don't have that political uncertainty, if you will, like we do here in the United States. What's great about this country is that we can, to some extent, change things on a dime, and make big policy changes. President Trump has certainly been trying to do that with his big, beautiful bill and these tariff packages that we've been hearing about, all year. However, in the meantime, that causes a little bit of chaos, and investors do not want chaos. And so, in the meantime, it's causing some problems for the dollar.
Sure. Well, and let's get into that. You mentioned how people are looking for safety. Well, and we, in fact, our earlier podcast as well with Ray Dalio, as we were looking at some of the comments he made, he
Hmm.
was very bullish on the fact that, people, countries, and people should be, invested into gold and silver because that
Yeah.
is what's going to provide that hedge. And so, as we look at this next article, silver retreats from an almost 14-year high as dollar pushes higher. So it sounds very positive. This coming from Yahoo Finance. Bloomberg actually put the article out. We're reading it through Yahoo. But
Hmm.
this being said, this is normal. Like the dollar showing a little bit of strength. As we look at the long term trend again, with the dollar being down 10% year to date, even with this recent pullback in silver, silver's up
Yeah.
32% year to date.
Right.
Gold up 27%. And so for
Yeah.
those tuning in, it's very important to understand that this is the whole reason why we're putting this podcast out and why we talk about the need of being diversified in metals, because as you start looking at the unraveling of the dollar or some of these other uh, assets or investments out there, gold and silver, look, they're not the cure all to the world of finance, but they are proven to be historically one of the best hedges, especially when you get into uncertain financial and economic times, which clearly we're in right now. And it's not a domestic issue, it is a global issue. And so this is something, Chris, where as we look at what's happening with silver and look at the dollar, there's no shortage of people out there who are suggesting this is just the beginning, and I think they're right.
Yeah. Yeah, absolutely. And when somebody reads that headline, silver retreats from almost 14-year high, they may see that as a negative if they don't really read into it and understand that the fact that silver is hitting a 14-year high is huge. And a little bit of a pullback, as you mentioned, is normal. Anytime you have large, strides in growth, you will see little pullbacks in the market to sort of settle things down. Um, and a lot of this again is seeing a little bit more volatility because of Trump's tariff threats. He mentioned some extra tariffs on Mexico this last week, and so that's put some strain in the market. But a bottom line here is that silver has been in very high demand this year, and gold was, who's also having a great year this year, had a phenomenal year last year, and we were kind of wondering, when is silver going to take off? It usually does trail gold a little bit, and that's exactly what we're seeing year to date here. There's been a big influx of buyers into the silver market. And silver, even though it is near that 14-year high, is still relatively cheap, historically speaking. And to get into the normal ratio, we usually see about 80 ounces of silver to buy 1 ounce of gold. Currently, we're at about 86 ounces. So that
So there's
80 to
still
1
value
ratio.
there.
That's exactly it. The bottom line is silver would need to be at least $42 an ounce. And that's saying that gold stops growing. We've seen gold already grow 27% this year. So as gold continues to grow, we should see, $42 to $45 silver, and then $45 to $50 silver, which I know in the last couple of months we've done a podcast talking about that as well, with a lot of big market insiders making those predictions. So this isn't really anything new as far as the last few months go, but it's just more data supporting the fact that precious metals are going to continue to move.
Right. You're absolutely right. Well, so how can our listeners learn more about precious metals or find out how to get into precious metals, Chris?
Absolutely. Yeah. Visit us on our website, www.swissamerica.com. You can request information on there. We've got a handful of articles and educational materials there, but really what I would suggest is just entering some of your contact information so that we can get some physical materials off to you or emailed to you if necessary. You can also reach us at 1-800-289-2646. You can call that number or text 24 hours a day. After hours, just simply leave us a message with your interests, and we will follow back up with you the next day, get you any info you need, and just kind of explain how all of this works. And I think for a lot of people, if they're newer to this sort of thing, they need to have a little bit of understanding before they just jump in with both feet. And that's what we're here to do, is help make it a comfortable transition for you if it's something that makes sense in your situation.
All right. Well, thank you so much. Thanks for tuning in. If you're not subscribed to this podcast, please do so, as we'd love to stay in contact with you and bring you more information like this in the future. If nothing else, have a great rest of your day, and we'll talk to you real soon. Thank you, Chris. We'll see you soon.
Yep. Thank you.